Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, May 23rd. Mike Boutros with you on the mic. Good to see you guys all in the room. Aurelian, Iman, Peter, thank you for your comments, sir. I appreciate that wholeheartedly. Paulo, Marco, uh, Ziad, great to see you guys in the room. Hey, Pooja. So we've got an interesting scenario happening here. Dollar index is peaking through resistance at the monthly opening range highs. It's not really the most convincing break just yet. We are still holding the yearly highs. So we'll take a quick look at the DXY, Euro, dollar CAD, dollar yen. I regret, as I said in my notes yesterday, closing out that short. But we'll be on the lookout for a little bit of rebound here. Kiwi and gold. Big move in gold, taking us back to the opening range highs almost of the week. Circle back and hit Aussie and sterling, which is still on the collapse there on the back of that news coming out of the UK with Theresa May. We'll come back and hit crude, which we haven't covered in the intraday charts, but the levels look good. Not so much on the 120-minute, but the daily and weekly are starting to get into some pretty big levels. And SPX for Pete. I got you. I was looking at it just earlier when you mentioned it. I'm not really sure how to play it from here. I think you can get it a little bit deeper, but I'll show you the levels in a minute. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. Let's jump right in. So DXY, we covered this one a few days ago here. This is what the intraday chart looked like. Well, let me just take you to the daily real quick, or the weekly. We're still focused on this longer term trend. Same parallel from the 2011 lows. We've talked about it multiple times. On the weekly chart, that's really what we need to see validate a break with a weekly close above. Again, I showed you this earlier in the week, but we have not materialized one weekly close above that slope. So look, you're teetering with a big break. We need to see the weekly close. If you get it, there's a lot of room. Okay, 9930s would be where that initial slope line would come into play, but largely speaking, we have to respect this region here still. Daily chart looks like this. Okay, the opening range highs for the month are being challenged right here, but the yearly high is just higher. Okay, so the yearly high comes in, what, 98.33. Okay, so that's the first level to look here on the upside. On a closed basis, we still need a daily close above 98.10 to validate an objective break of the monthly opening range. You got some slope there as well. This is the same, this is the same gradient you see here in red as that blue slope. So, something's got to give here. If it closes the day above, if it closes the week, okay, above that key slope, you're looking for 98.52, you're looking for 98.69. That was just initial targets. It's a 2016 open, decent pivot in price and beyond. Caution here. I would not chase it. So I need to see what happens into the close of today's trade if we materialize above the weekly chart, more importantly, to validate a larger breakout. Here's the intraday chart. Another sort of cautionary look here. You're getting some radical divergence on the last couple of highs that we made since the open of the week. This is the 240-minute. Had an outside reversal, 4-hour outside reversal yesterday. We talked about that, took us right into support. Typically a bearish development, but we didn't. Broke to a new high in overnight, and yet a third reference point on the divergence. So it's not, if this was going to be a break of the monthly opening range, if this was going to be a clear-cut break of that major resistance slope, you'd want to see acceleration. You want to see something like this. You want to see something like this. This is not, for me, something that's tradable as far as trying to chase this higher. Still could hold, okay, and it still could move, but we'd need to see those closes to give us some validation. Near-term support still 97.87. Longer-term 618 level. You got basic slope there and a 3-point touch right here on the way up. And you got the weekly opening range lows, objective. Here's the 120-minute chart. So if we make it sub 97.87, that's your mark to look for the larger move lower. As it stands right now, I need to see how the US market opens. So DXY, not really the most appetizing piece heading into the open from where we are right now. Ideal scenario, it finds some exhaustion here, but We're testing a breach of the weekly opening range, objective stuff. If this pullback holds in this region into the US Open, you might be on your way for a test to be really high again. So just keep an eye out that. Offshore dollar funding markets are on fire, says Ty. Interesting. Yeah, I mean, look, it's the same scenario with euro. That's number one. Here's number two. Here's euro dollar. It's the same scenario. That's testing pretty important level here as well. So here's what I showed you yesterday on the euro. Really clean weekly opening range heading into Thursday. Ty says, I do mean on fire. Okay, for the dollar funding, right? Interesting. The euro is just still was, or yesterday, as of yesterday, still was holding that weekly opening range into the close, and it was above key support. Remember, we talked about 1140 for a long time. Before I left, that's exactly where we were dropping into here. 1140, you had a 786 retracement, larger level there. Here's the euro on the longer term. The low day close for the year was there. And on the weekly chart, we've been talking about a very similar slope as we were looking here on the DXY. Here's euro. Okay, again, we have not materialized a weekly close below. If this pushes and closes the week below, that would be a confirmed break. This slope has been instrumental in a lot of different turns in euro since the 2015-2017 lows. So it's a precarious situation. Look, on its face value, looking at the weekly chart here, and I noted this early in the week, we made an outside weekly reversal off slope resistance last week. That's pretty bearish, okay? But that still does not, negate the fact that you're still trading just above the monthly opening range highs. This is the weekly close lows for the year. It's being tested at 1140. Really precarious situation right here for euro. So again, as a near-term guy, I'm still more inclined to look for some sort of rebound. Would not play alongside past 1186. That might be a better entry to try to press the short again. But as it stands right now, it's all about the daily closes, just like DXY. Here we are, low day close, also the low week close, 111.40. We're testing it right now. Add some salt onto that, the fact that this is actually the objective monthly opening range lows. So either way, you would want to see a close below this to really validate the break. So not in anything on the euro, not anything on the DXY. I think the euro, at least the play for me when I first came in was the reversal into 1186. But so this was the long that was the only play for me this week. But again, the reversal that you got off that was clear cut and well defined. And then you had a well defined weekly opening range. So if this were to hold and fail right here, okay, 111.10, that's your target. Yearly range, objective lows. You got slope there for that parallel. Makes sense. But if we start to climb back above 1140 into the US Open, I get it, Ty. The funding markets for the dollar might be on fire, but that still technically wouldn't put me in a bearish posture, at least for support when euro's trading right into it. So look, it's a big level. The objective nature of it also is very appealing to me. Is the low week, low day close, 786 retracement. We might straddle this for a while, but if we resolve above, I still think the focus or the risk is for a little bit of a rebound. Like I said, the only thing that looked really good to me this week was this play. And if you follow the euro update from the previous, here's what it looked like into the start of the week. That's why for us it was kind of like a gift, right? We were looking for a key support. We talked about 1140, 1143. You had that long-term slope there. We dipped right into it, then ripped right into 1186. It was too perfect. But the fact that that failed so miserably, and then now you're seeing this break, it really puts the onus on this trying to hold on. Okay, it's really got to affirm a larger, a push, a close sub 1140. Questions, comments, concerns on euro? That global macro, bigger picture, not daily squiggle. I hear you on that. Combos, Ty. Here's the combo. So one thing I want to note, You know, I'm on the verge of kind of dumping this slope. I want to see how today materializes. It's not really doing much. It's kind of cluttering up our chart here. So this pitchfork off the recent lows from April, um, see how today reacts. Okay, see how today reacts. I might just dump that, make things a little bit cleaner here. And we're still focused on that longer term slope that you see here in blue. Okay. Euro and DXY flirting with, I guess, disaster for the euro, but certainly a breakout for the DXY. Dollar CAD. So we're pushing through resistance. Another one where the levels were just super clean this week. I hope you guys got a chance to play this one. Probably would have had a lot more of an aggressive position on this if I wasn't messing around with dollar yen. But here is where we were yesterday on dollar CAD. And I mean, even the previous update, dollar CAD's been something I've been updating you guys on daily ever since this. We were coming into support. We talked about the range lows, the May open coming in at 33.88. Okay, and just lower, you had 33.54. The low is 33.57. Literally broke this level. You had a longer term slope there. We dipped right into that, convergence, 3 pips off, and then this thing just ripped face. So the first target, 34.35, was being taken out last night. Secondary level and a level of near-term bearish in validation would be 34.56. If you make it through there, well, then you just broke the weekly range highs. You just broke slope resistance. You just broke uptrend support and now resistance. I think you'd look for continuation. All based on the daily close. Look to the right. A perfect example of why we require daily closes to I'll get back to the DXY for the combo in a second. Sure. Why we require the daily closes to validate the break, because here's exactly what it looks like on the daily chart. We were talking about a daily close below the May open needed to validate a reversal. We dipped well below that, even saw a tag of this level, but where did we close the day? On an outside reversal higher. So you had a daily outside reversal candle off the monthly range lows. That's pretty bullish. Okay, that's pretty bullish. So last night it looked like this. We had noted the outside day reversal. We had noted that this thing turned just pips from confluence support. And, first target was already taken out. The bigger level for me was right here, the weekly opening range highs. And a 618 retracement of the decline gives you 34.54, 34.56. We're looking for a topside break and close above that now. Okay. On the daily chart, I have 34.61. That is just the simple high day close for the month. We executed that on the 17th. So on a daily close basis, if we get above that, it would be pretty constructive for the continuation pattern. Just a quick reminder of where dollar CAD is on the weekly charts. All right, 34.35, 34.37. You guys have heard me talk about that since last year. Since November of last year, to be exact. Here was the advance early in December. We tagged it right here, pulled back. It was the breakout that took us into the late year high on the way down. We accelerated on the way down. It was the opening range highs for the year, heading into March, heading into April. Then we started doing this. For the last 5 weeks, 6 weeks, we've been simply straddling this critical confluence level. It's the 618 retracement of the entire decline. And again, the 2017 open just being an objective level, but has seen pivots in price. It's the only reason we keep it on there. Now, I'm not going to be looking for the 2016, 2015 open every year, but it's foolish not to notice when you're seeing confluence like this. So objectivity is that we're still in this godforsaken range in dollar CAD. That doesn't mean there's not opportunity. Okay, I just want to show you that the weekly closes have been above and below and above and below for the last 5 weeks. So we really need to just focus on a break of that near-term range. Daily chart, again, former slope resistance in momentum, support, still holding support. Here's the monthly opening range lows. That's hasn't gotten a close below. Here's the monthly opening range highs. That hasn't gotten a close above. But this slope seems to be working pretty decent. And if you take a parallel of that same gradient attached to those lows, look what just happened. Boom, boom. Okay, so it's, we're still there. We're still there. We still haven't cleared the range. And the upside trade for me, not anything here at this point. Like I told you guys, that level I was looking at yesterday was this. We're pushing through it now. So if we resolve and kind of settle up here, it's still constructive. It's really nothing to be looking at until you get back into the highs for the month, like 35.15. Bigger breakout level will be 35.37. You have confluence there with a 786 retracement on the daily chart here for this near-term upslope. But all things held constant, you posted an outside day reversal off the monthly lows yesterday, and here we are moving higher. So on a pullback, the first area of support you would look at, well, hate to say it again, but 34.35, 34.37 is going to be the same level. We'll leave the May open as near-term bullish inval at this point, and the next upside target is pretty close to the highs that we made last week. Any questions on dollar CAD? It's been a decent play this week. Oddly, in dollar yen, interestingly enough, feel dirty about it, but it was still a decent play. So we'll take a look at that. But Loonie, looking to see if we can find some support into 34.35 to keep this thing going higher. So no change to any of those levels from yesterday. Okay, Taiwan to DXY real quick. Here's the combo for that. Feel free to take your snapshot, Ty. And a quick reminder to anyone in the room, if at any time during the webinar, you can click on that camera button on the top of your GoToWebinar screen and take a shot if you need to refer to these charts later. But the levels are all the same from last night. Still long on it, Paulo, on Loonie, nice. So I assume you mean dollar CAD, right? To the upside. So yeah, at this point, I'm not sure where you're long from, Paulo, but I would bring my stop up into the money, or at least break even. Ideally, I'd have a stop if I was long from anything sub 34.10 or basically these highs. I'd have a stop just below this. So if it does pull back, give it a chance to find some support for the resumption. But if you're long from anything above 34.37, I'd at least go break even. He says, okay, thanks, right on. All right, dollar yen, number 4. Here's what the abomination looks like. So the weekly chart didn't really have much juice on it to get really aggressive on it, which is why, again, I bailed so early on the decline. I took like half off at like 15 pips in the money, but then the rest of it played out pretty well. Here's what we were looking at. The 2019 open held as support. So an objective level, not my opinion, not Jamie's opinion, fact, here's where we opened the year. And on a closed basis, look at the pivot that's been there. Okay, you're basically looking just basically at the 110 handle. Even look to the left. You have some resistance, break, acceleration, right? Pivot break there, resistance, right? Resistance early in the year, breakout, support, support. So on a closed basis, yeah, where we closed last week and how we reacted on a dip below 109.68 had us looking for a little bit of a rebound to the upside. Now that rebound was coming into near-term resistance. So the weekly chart doesn't have anything here to look at for why we took that short, but the daily chart certainly does. The level of interest was 110.70. We talked about that early in the week. 110.70 was the simple 50% retracement of the decline off this year's high, but it was also the 50 line for this pitchfork. Now again, nice decent confluence region, but when we broke the 50 line, it was on an outside day reversal lower, and you saw the acceleration, actually the breakaway gap that we made early in the month. And then on the downside, the 50 line caught, or the 25% line caught the lows. So on the upside, only made sense for some symmetry here to look for some sort of reaction near 110, near 110.70. Now we actually didn't stretch into it. I think the high was like 68 or something, but there was some really decent signals. And daily chart momentum was coming right into the 50 level. There was the turn. Just was a nice play to the downside. So to take a step back, the daily chart, near-term support, a larger area of support is going to be that same level that we just looked at on the weekly chart, the yearly open, objectively at 109.68. So, I don't know if you get quite down there on this stretch per se, but levels to keep in mind on the daily chart. 109.68 still going to be objective yearly open support. A break and close below 109.28 is needed to mark resumption. That's the 618 of this year's range. Actually, that doesn't take into account that new high we made last month, so maybe we shift it up a little bit. Okay, and then I'm still going to want to look at that low day close for the month. So 109.30, same level, 109.29, 109.30, 109.38. All right, intraday chart. This is where the play was. So again, there was that 50 line on the 50% retracement, and that converged on a basic parallel. This slope derived from these two lows, extended off the high that we made on the 14th, converged right there. So we were looking for reversal, something, some kind of exhaustion at any event in any way. And then you got momentum starting to break back below 70. You got a decent momentum trigger on the 30-minute chart. In any event, we paused here for a while. Again, I got shaken out pretty early on half the position, and the rest of the limit was at 110.30. I didn't know if we were going to make it quite into the weekly open. And when I saw this rebound yesterday, I was like, all right, it's a good thing I got out. Long story short, here we are in the pullback. Now this breaks a 3-point support trigger and does leave the gap, or it does leave the risk, I should say, rather, still weighted to the downside. Support, guess where it comes up on the near-term chart? Same level. Okay, even the near-term advance gives you a 618 right there at 109.68, 109.65. So if we're able to hold a rebound, back below 110.30s, 110.35, basically the swing high, like here, I'd still be looking for that move lower. Okay, but we need to hold sort of resistance near term here. And the resumption trade lower, if it is heading lower, would be that break below this region. So some interesting moves here on dollar yen. I kind of still wish I was holding a little piece of it, but I guess I'm just getting my legs under me again. So, here's what it looks like on the 30-minute. And I was trying to kind of work this out before the webinar, but I didn't get a chance. So just bear with me. All right. Okay, I don't know, what the merits of this slope are yet. You haven't really gotten too much play. 50 line was decent, but I don't like this median line break. So something to consider. And then obviously just the objective kind of basic slope, nothing fancy. Yeah. All right. Let's see how this plays out. First things first, on the recovery. I mean, if you're holding, I'm holding short from that 50% line. I wonder how does dollar yen relate to DXY. So here's the thing. You don't want to correlate them too aggressively, okay? Because we got to remember one thing, Paula, the DXY is 60% weighted euro. And with that in mind, a lot of times larger moves or lack of moves in the euro will kind of mask what's really going on underneath. Also note that if we truly do enter into a deeper risk-averse environment, the yen will tend to do well, where the dollar could also do well. So DXY might look like it's holding its ground, if not moving higher, while dollar yen is moving down. So don't, DXY is something you kind of use as just a barometer for the dollar move. It's very, very helpful in trying to ascertain what's going on in the euro. But as far as trying to play intraday with the dollar yen, it's too small of a percentage. So don't put too much emphasis on that. So yeah, if you're holding shorts, the weekly open was kind of the last target that I'd be looking at. As long as you hold sub 110.30, I think you're okay. But levels to be mindful of, the objective weekly opening range low, it's 109.80, and then again 109.68, 109.65 is kind of the big spot. Okay, thanks. You got it. Any questions on dollar yen? I can't believe my first trade on the back was on dollar yen, but nonetheless, a win's a win, I suppose. Next up, Kiwi. That'd be number 5. Here's Kiwi dollar. So it's a steady grind lower, and I noted this yesterday in the update. It's a steady grind lower, but if you didn't have a position on this early in the week on the break of the objective weekly open here, I don't know that there was a play. So here's dollar yen. Okay, levels unchanged. Here's Kiwi. Into the start of the week, here's what it looked like. We were kind of just looking at this real clean descending pitch forward, was really, really clean. Even within that, you had an embedded channel, 2 tags of support, 3 tags of resistance, 4 tags of resistance. Kind of put a near-term focus right here with bearish invalidation at the January low, the opening range low for the year. You got a rebound early in the week. It held this slope. Literally didn't even make it up into that 65, what was that, 65.53 region before failing, break below the weekly open. You're looking for a tag of the low day close, 64.55. That's still the next target. But what I noted yesterday is, look, this thing's making some radical divergence into these lows. You're still marking that here this morning. Lower low, lower low, lower low, lower low, and here we are, just a series of really subtle higher lows. These tend to be sort of longer term exhaustion turns. So it would have me very apprehensive on trying to take anything short from here. Momentum is just not in your favor, and there's nowhere to put a respectable stop. And that's one thing we always want to keep in focus. It's not just about direction, right? There needs to be a setup. So I could be right, in just thinking this is going to go lower, but unless there's anywhere to put an assertive stop, it's not a setup. It's not a trade setup. So it could still drop into 64.55. I think that low day close has merit. It's a really nice spot. It converges on slope and the works. Here's what the daily chart looks like. It's right here. So 2018 low day close, slope support, sort of be a nice spot for this to find a rebound. But again, the momentum is just pitiful. What else could I show you about Kiwi? Oh, by the way, quick segue. I'm going to put this on the list just that we talked about it. TNX. Guys, remember this chart? I haven't changed anything. I haven't changed anything on this chart. Look where we are right now. That's the 200-day moving average. I'm sorry, this is the 52-week? No, 200-week moving average. Okay, you can see clear pivots in price along that gradient. It was the low that we caught back in March. That's converging on the same slope we've been following from last year's highs. Okay, there's slope support on a closed basis. That's exactly where this thing found weekly support before the rebound. The rebound found resistance along the 50 line, which was support, resistance, resistance. Here we are again. Something's got to give. Watch the weekly close here on TNX. And it's just a 10-year treasury note yield, guys, just so if you're not familiar with this chart. So it's uncanny. I always tell guys sometimes if you have doubts about technical analysis or you kind of lose your way, just set up a weekly or daily chart, go away and check it out after a couple of weeks. I mean, this is kind of just unreal. So watch this level here. It's really important. But I digress. Back to Kiwi. Here's Kiwi on the weekly charts. It's, again, direction looks clear. Tradability, if you're not already in it, it's a tough call. So 65 is the 2018 low week close. And in fact, we've not made a weekly close below that. Last week's close was just above that. We closed at 65.14. So first level hasn't gotten a weekly close below, and we're already looking for a tag at the second level. Again, the median line is there. Longer term, this is the weekly chart. Keep in mind that pitchfork from the 2011, 2014 highs. 50 line, break, acceleration, resistance, 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 break, acceleration, support, break, acceleration, break, acceleration. Kind of hovered there for a while. Resistance, resistance, break, acceleration. That same slope converges right there. So Mike, what does that mean? Well, if you're holding shorts, that should be sort of your area of last limit resort. If we gets down there, look to clean up that trade. If you're looking for some sort of recovery, rebound trade, exhaustion trade, this is the region I'd start to look. Anything in between, use caution. Use caution. The levels just aren't really there for a clean setup. So that's the look on Kiwi. Again, ideal scenario, this kind of just drops and washes out into 64.55. You get a larger reaction there, maybe a reversal candle, maybe an outside reversal candle, something, and we'll play a little bit of a recovery, ultimately, again, to sell this. But from here, it's kind of hard to get into any new positioning. That is Kiwi dollar, number 5. We'll say TNX was number 6. Okay, let's hit gold from last night's update, and then we'll go back to Aussie and sterling. Gold. My dogs. Here's what gold did. What a great setup. We've talked about this. We talked about this earlier in the week, that we were looking for an exhaustion low, some kind of move. This is what I published yesterday on Daily Effects. Here's your weekly chart for gold. The main level of focus, and for those of you who are looking at the quarterly forecasts that I also provide for Daily Effects, we were looking, essentially our call for the quarter was to look for a low either at 1275.76 or 1258.53. So the 3-month objective, essentially into the close of June, is to look for some sort of marked low here or down here. There's a lot there, some Fibonacci levels there. 1276 is the actual yearly opening range low. We have not yet made a weekly close below this confluence region at 1275, 1276. And that was the focus, right, into the start of the week. We've been talking about that level for a while. This isn't last night's update, but into the start of the week, here's what the 20th looked like. Okay, and the whole focus was, are we going to get some sort of move off that region? Here's what it looked like on the weekly chart. Same zone, right? We dipped below, but based on the weekly chart, we need to close below this. Haven't done it yet. Haven't done it yet. So yesterday I put out a piece just telling, the wider subscriber base that you're basically looking for, confirmation on the weekly chart will close below this to keep the focus down on this larger region. 1258 is 100 off the high, so it'd be 2 equal legs down. 1253 is a 50 off the low from last year, and both of those levels converge on slope. So the pitchfork that we were in all of last year, essentially, with the breakout, ever since that, it's been support, and that converges down there. So you know where to go if this thing breaks lower, but the whole focus was that the bearish outlook, the immediate downtrend, was at risk heading into this level. We've tried this level, guys, for literally since what, mid-April? So almost 5 weeks, 6 weeks, we've been trying to break below it and haven't made a weekly close below. That's telling, right? The one other thing I want to say is that we made an outside weekly reversal last week off the yearly open from 2018. You see that? So this is where you want to pay attention to these things. That's bearish, but support was just lower. So now that we've made this range expansion or range extension, this is the exact monthly, opening range at this point, and it gives you really well-defined levels. So we're looking for a clearance of this super tight range. Like I say tight, it's like $25, but you can see what's been happening in price. So the weekly chart, pretty clear as far as the key levels. Daily chart looks like this. Whoops. So there's a couple things that we were looking at here. This slope, which derived off these two trend lines, okay, was support, was support, was support. Last week, it looked like we closed right there, literally. So we talked about 1270, we talked about 1266, levels of which, if we get a drop, could offer a little bit of a reversal play. Momentum, a 3-point resistance trigger, which broke on the breakout, now offering support. Gold on the intraday looked like this. And here's what we look like on the 20th into the open of the week. We were trading right here. I've removed that level, obviously, because we broke below it to clean the things up. But near-term resistance was 1280, 1283, sort of the next level up to, if we do see the break. Dipped, got a tag at the low day close, which was 1270. And man, the next following day is when we start to say, look for bottoming. And that's what I told you guys last night, right? Here's the update from last night. The whole objective is, as long as we stay above this, look for a break above the weekly open objective 1277 for a 1280 target and a 1283, which is the May open. Okay, so we were just looking for some near-term bottoming here, and it's exactly what we got. Pullback, found support ahead of the range lows from the US session. Really nice opportunity to take a long position off that low. We had a couple of opportunities actually for a long position against that low. Again, as we were making those lows, divergence in price, lower low, higher low, higher low. Here's the reversal break. So we made it through 1280, we tagged 1283, what now? Well, just gonna zoom out real quick. Here's the 240. Eman says, what a beautiful setup, Michael. Just hit your target at 8:27 your time. Close my trade, which was at 1271 since Tuesday. Thank you for all your kind effort. Hey, you're more than welcome, man. Again, they're not my levels. I'm just helping you find them, right? They're the market's levels. But yeah, it was definitely, I agree with you, a very clean setup. So even the downslope that we were working with on the intraday chart had the median line there as well. So there's a lot of reasons for us to start to look for the long position as we hit and rebounded off the low day close. The play was for 1280 and 1283. Eman played that well. Oh, that's what she's saying. 1283, your target. Yes. So right, that did hit and pull back. Now this is objective monthly open resistance. So if you're holding long positions, you want to clean some of that up here. If you're long from anything above 1277, I would put a limit just below the yearly open at 1279.89. So if we get back below this, literally on a pullback right here, I probably would want to bail if you're holding anything long, from above the weekly open. That being said, I happen to think you get a pretty well definitive answer here. If the May open holds as resistance and we make it back below the weekly open, I still think it probably drops for another low. Okay, if we're able to stabilize above the yearly open, and specifically if we push for a move higher through the monthly open, then I think you start to look for that 1291, 1293. This is the big level. Just a larger pivot in price. You got slope up there, the works. So that's what I'm thinking right now. The long side play that we talked about, in my humble opinion, again, Iman Pooja's in this too, was discussing it yesterday at Jamie's webinar. Looks like a triangle maybe in the works. I'm of that mindset. What I was about to say is that the play for us was for the long side into 1283. Now that you're getting this reaction, you gotta want to take a little bit more of a reserved approach. Yeah, this could be consolidation, absolutely, and you're making some sort of larger triangle here. I would say keep an eye on broader risk. I'm not the guy who beats the drum of, oh, risk on, risk off. We're not quite in that environment right yet, but markets have seen pretty big spill. Dollar starting to rally, gold starting to rally. You're starting to see a hint of that offsetting behavior that we tend to describe so often, and so many people mischaracterize as risk on, risk off. But yeah, I'm more reserved here with gold. You kind of want to put your head in a range type of stance from here, just because of where we are and how we reacted. Big support. We just saw failure at the monthly open. Technically, if this, like I said, dips back below the weekly open, I think that would mark resumption lower. But if we're in the triangle, it would suggest that you have some more upside to go before you start to hit the range extremes. And in that case, you want to kind of be really nimble here. Okay. W2I's falling, LOL, Paul. Yep, another reason, right? You're starting to see that hint then of essentially investors taking that risk off environment. But DXY testing yearly highs at 98.33. You are right. I guess that would put Euro right through support. Yep, 1180, 1110 on tap. So look, this is the reaction you would want to see if this is a legit break. Keep in mind, we go right back to the basics, always looking at objective natures and price as opposed to opinion. Here's your weekly opening range low, weekly opening range high. It's Thursday, the ideal time for a weekly opening range break. Here's the break. You look for a Thursday, Friday low. Not an area to chase, but if you're holding lows, next level is 111.10. Beyond that, man, we need to rework the levels. There's really nothing except slope, and that takes you down to 1050. All right, so caution here heading into the yearly lows. Okay, a quick recap back into the dollar crosses. We have 15 minutes left here in the session. Here's Aussie, number 8. The interesting thing that Aussie has not broken its weekly opening range yet, although you saw big breaks in Euro, big breaks in Sterling, even a topside break in dollar CAD, which is probably doing pretty well now, right? Yep. Right on up, 35.15, don't change a thing. Dollar yen, still hovering right there. So for Aussie, I suppose you're probably going to see the break and test of that 68.55. Remember, 68.55 was the level that we were looking for on this initial drop. When we gapped higher into the open of the week, we highlighted this pitchfork and said, as long as we stay within this, you're basically looking for opportunities to sell. Here's Aussie. All right. And ever since this update, this is on the 21st, we've just been hovering and sitting right on the Friday close. So we gapped higher, filled the gap, and we're kind of sitting in the weekly opening range right above Friday's close. So I just want to bring to attention that the 2016 low week close is still a level I'm looking at. That's 68.55, which isn't too below the weekly opening range lows. So don't get too jump on the bandwagon if this does move lower, because I still think that's a pretty important level. Here's the daily chart. Again, your 2016 low is 68, 28, 68.27, but the low week close is 68.54, and that converges still on slope. Okay, the median line for that pitchfork we've been following from the 2017, 2018 highs. Aussie on the, well, I guess let me show you really quick the weekly chart. No change there. Same levels, 68.55 is going to be that low week close, low day close. Here's the low, and in slope comes around 68.28. So take it for what it's worth. Again, one of those trades where it hasn't broken the range lows yet. If you do sort of see a break and a recovery, your stop would be against that high that we made in Asia, or I guess that's Europe. Looking for a tag of 68.55, but it's just too tight. It's too tight for me. I still think this could wash out, even tag that median line, then rebound again. I don't know. I just know that momentum is not neither super bullish, neither super bearish, and the weekly opening range is preserved. So I think Aussie's still a bit of a fake out possibility, despite the dollar strength that we're seeing, and it's held its own, right? Despite dollar strength. So one where you'd want to be a little bit more cautious about trying to play this lower. Last but not least, from the dollar crosses is sterling. I guess at this point, if you've been watching the news, everything's sort of panic mode, or everyone's talking disaster mode. I was just talking to Jamie about this yesterday. I'm of the mindset that this might actually be a decent long at some point soon. Here's sterling on the weekly charts. So the implications of the break that we made last week were big. It was the uptrend that we've been following since the lows that we made late last year. The parallels on the upside were extraordinary. Had a really nice exhaustion candle, outside weekly reversal into the highs, which was the onset of the failure. Nice bounce off the lower parallel, and the break of the lower parallel saw acceleration. Not only that, but that same week, we closed below the 2019 open. So yes, it's a bearish trade with the break of that move that we made. But this immediate decline still having me looking at looking at this from a cautionary approach. Remember, we started off the week saying look for reaction at 2660. That was sort of the area of which would define 100% extension off the high, so two equal legs, and it converged on slope, just a parallel of that gradient, right? There's a tag. We closed the week there, so I was like, you know what? It's still a possibility that we could see exhaustion there. Now, we talked about this on the 21st. They had made a really clean weekly opening range. And again, the setup on this one, to go to the previous update, was to play the long, right? We were looking for support at 1266 to play a long position, 2798, first target, bearish invalidation at 2859. And it was a decent setup. Here's what it looked like. Here's the 120, right? So we dipped down into this zone. First level was 2697. That held. You ripped, hit 2028, failed right ahead. That 2860 level, the high was like 2815. And then here's the failure and move lower. But we're still holding that gradient that we highlighted here on the 21st. So look, divergence all up into this thing. Lower low, lower low, lower low, lower low, higher low, higher low, higher low. And then even, like I said, equal lows as price action is making a new extreme is still divergence. So there's not necessarily an upside trigger break yet. But I want to see where sterling closes in relation to this 2660 into the close of the week. If we were to make another stab lower, hit that parallel, stabilize a daily close above this, a topside break of this objective slope would have us looking higher. Again, the same targets, 2019 open, 2754, 2798, that 28 handle essentially. Oops. Now, guys, I guess I don't have to say it. You guys all know, do realize that you're susceptible to all kinds of headline event risk, random news wire crossings that could obviously shift and offer up huge lobs like this. Just play it accordingly. I'm on the sidelines here, but definitely looking to see if I can track some sort of exhaustion on this decline. Not for the faint-hearted. Okay, quick look at crude, and then I'm going to come back to that SPX for you, Pete. Here's a look at what crude prices are doing. I think the weekly chart kind of says it all on this one. And it had a ridiculously clean weekly opening range break here as well. So here's crude prices on the weekly chart. Super objectively clean. Remember that back in April, we made that outside weekly reversal off resistance. We automatically start to say, look lower in crude. Really clean on a closed basis. You had the confluence region there of the 618 retracement of the decline off last year's high, and that swing low that you made from August of last year. Pivot break saw acceleration. That was the highs that we opened the opening range month for. Outside weekly reversal shifted the focus lower. Near-term channel broke. That kept us looking lower. And then this is what we've done this week. Right back into resistance. Again, the same range, 63.68 to 64.40. That held last week. That held this week. We're at near-term support. Objective pivot range of the 2018 Open is 60.06 to 50% of the entire drop, which was here again, the origin of the breakout is 59.61. We're testing that right now. Momentum. Here is the trigger. The break that put us long just happens to be a break of that same level, now being tested as support, as that same level is tested as support. So when you look at crude prices from a weekly chart, it's kind of freakishly clean. Zoom in on the intraday or the daily, it shows a little bit of a different picture to continue favoring the downside, like here. Here's why. A basic slope off the highs for the year. It looks like a 3-point touch right there, but whatever. We'll call it a 2-point touch. Gives us this gradient. Extended off the low for the month. Converges on the late month March low. That's 58.19. What else am I looking at? Well, it looks to be a very clean and objective monthly opening range break if we're able to close at these levels. Here's your monthly open. You open right there, and that's actually is what held resistance all in this last couple of days here. But it's also the monthly opening range highs and that 618 that we talked about at 63.68. So resistance, resistance, resistance. You had an outside day reversal into resistance. That's the hallmark of an exhaustion setup. And then here's the breakdown. If we clear this, we're clearing not only the objective monthly opening range low, but we're also clearing the 200-day moving average and a basic 236 of the advance for the yearly range. So I'm going to get rid of that 236 just to keep this clean and continue to highlight this zone here. Look for a daily close below. If you get the daily close below, it's a bearish trade. You're looking for 58.19, the swing lows, 38.2 of the basic yearly advance takes a 56.36. 57.36, excuse me. Two downside targets. All right, and one other thing I wanted to add here, not sure if I put it on the intraday chart, I think I did, is this 100. That's 59.75. Again, whew, it's the 618 extension, but look where the 100 comes in. Same zone, same zone. All right, intraday looks like this. Doesn't get much cleaner than this, guys. Here's your weekly open. You set a weekly opening range high. You set a weekly opening range low. Monday, Tuesday, Wednesday, you check the high again. Boom, you break. Keeps the focus looking for a late week low. Still could get dropped a little lower, but if we hold below 60.88, the 200-day moving average, let's call it, those pivot lows, okay, you're essentially looking for that drop towards 58.16, 57.36. I don't have the extension on here, so let me add that real quick. Yeah, watch this. Yeah, watch this here even. You see that? That's the same gradient that we're using off the highs. A little messy there, but with support, could give you something here. But in any event, bearish sub 60.88 at this point. Any questions on crude? One other thing I just want to take a peep at real quick. Bear with me. Well, isn't that interesting? Leave that slope on there. Could offer some guidance. Okay, last but not least, SPX, and then Paula wants to take a look at Swissy. If we have time, I will take a look at Swissy. I actually do have that setup I talked to you about on Tuesday. Do you remember? Just a quick update. This is what it looks like now. It's still holding that pitchfork, but it's been, still range bound. Hasn't really given you the opening range break. That was a fake out and a half yesterday. So I don't really know how you want to play it. We'll come back to this in a second. But Pete, here's SPX. I haven't had enough real time to spend with this chart, but I mean, ask and you will receive, my friend. Here's what the daily chart looks like. So remember that slope that we were following for so long? We talked about 29.29, which was the high day close from last year. Obviously we broke through it, marking some divergence into those highs, and then the failure in the breakdown. We were looking for a support zone here or a pivot here. That was 28.62 and 28.76. I think you can say you got it, right? Support slope broke. It's exactly what we repeated out last week on the high, on the stretch. And here's the move lower. You want to see something freaky, put this onto the weekly close basis and look at that price action. I mean, it's just disgusting, right? So long story short, the weekly chart, what is the weekly chart saying? Well, the weekly chart's still highlighting 28.12 to 28.11 as a key zone. You have those swing highs that you made there post break last year, and that's 28.21. 28.11 is a basic 236 of the advance from the December low. So sort of a zone to look at objectively, right? You have highs, 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 pivot break, sort of support. So weekly chart, right? Or excuse me, daily chart. Here's the SPX weekly. Okay, you want to put this on log scale to give you a little bit better of a visual there, but you can see things aren't looking super constructive. So I'm looking at this range right here. I would say the objective range would be 28.12 into 28.76. That's sort of the key zone I want to see break. Obviously, the 618 break right here at 27.92, that would mark resumption lower. So you'd basically be looking for a target way down here. I'm not going to be a popular guy if I put this on Twitter, but that's just the implications if we break that low. Intraday, though, Pete, I know you look at this intraday as well. Here's a quick interpretation of it. Now, this slope that you're looking here, I did take some liberal or poetic license. It's based off of these lows, but the gradient has been very fruitful. Extending off these lows, you saw support, kind of a messy test there, but resistance, pivot, support, and it converges on the same level we just talked about. 28.12, I'm guessing 28.21 is that high. $28.21, right? That same zone, it gives us a gradient or a slope into that zone. Whether you put it off these lows or whether you stretch it off these lows, right? It's still giving you the same sort of picture. So I'm looking for reaction down here. I'm looking for reaction down here. What does that mean? If we see I don't know where that came from. Whoops. If we see a break and concerted push below this, you'd have to continue to favor the downside. And that would put the risk off trade if it does materialize into further dollar strength, into further yen strength, into further gold strength. All that being said, there's no trade per se from here. You're trading into support, and we want to see reaction here. Bearish invalidation for the near term is just going to be the same level we were looking at on the breakdown, would be 28.68. And obviously, it's a nice pivot region. You have basic slope there. So look for a break of this zone for guidance. The March open break would be, the fact that it's the March open, again, is not necessarily in and of itself the technical factor, but very clean pivots, right? That's what would put us in, broader resumption for a larger decline here towards 2730. Pete, does that help? He says, great, thank you. You're more than welcome, sir. And thank you again for your comments. I really do appreciate that. And dollar Swiss, Paulo, this is what I'm looking for like I said, don't really know how you want to play this. The weekly opening range, in my opinion, remains intact. The 2018 high close 101.09 is a level I was looking at, but we kind of sailed through it so many times. Still converges on slope though. So, obviously if Euro breaks down, your kind of intuitive thinking would have me looking for a breakout higher here, but this just could be a simple consolidation pattern. I really don't know if there's a necessary play until we kind of clear this zone. Downside targets are pretty clear. 110.40, 100.40 and 100.25 are both levels I'm still looking for on the decline. I was kind of hoping you were get that here when I saw this break, but we turned just ahead of it. So it still might be the play. The 618 is 100.25, but that's contingent on us breaking this sort of consolidation pattern lower. A breach, and you could risk 101.60, 101.58, 101.60 still. And again, based on slope, if you kind of extrapolate, this, kind of be looking something like that. Range contraction. See if we can't get a clearance here. All right, I'm way over on time. Guys, thanks for everyone who attended here. I will have this posted shortly after. Watch into the close of the week. Should be an interesting close. A lot of geopolitical risk and a lot of headlines in general are shifting things around. And we will see you on Thursday next week. Obviously, Monday is going to be Memorial Day, guys, so we're not going to have a webinar until Thursday. I'm sure Jamie will probably still be on tap on Wednesday as well. Till then, have a great weekend, everyone. Iman, Paulo, Peter, thanks again. And I will see you next week. Cheers.